Hello everyone, I Dilip Parmar, research analyst at HDFC Securities. You are listening Currency Weekly podcast. The Indian rupee has experienced a notable volatility throughout this year, struggling to maintain stability even as the US dollar lost ground against the several major currencies. Despite the favorable external environment that would typically support the emerging market currencies, the rupee remained under persistent pressure. One of the primary factors behind the weakness has been the continuous foreign fund outflows from the Indian equity and debt markets. The steady exodus foreign portfolio investment has exerted downward pressures on the rupee, widening the demand and supply gap for the foreign currency in the domestic market. In addition, trader sentiment remained cautious and often uncertain due to geopolitical tensions, uneven commodity prices, and ambiguity surrounding the pace of monetary policy easing by the major central banks have made the investors hesitant to take long positions on the rupee. The rally in the metal prices have further strained India's trade balance, amplifying the concern about the inflation and current account deficit, both of which tend to weaken the currency. Moreover, despite the central bank's active interventions to smooth the excessive volatility, the underlying pressures from the external factors and capital outflows have overshadowed these efforts. Looking ahead, the overall trend for the spot USD INR pair appears to remain bullish, indicating continuous strength in the US dollar against the Indian rupee. A decisive breakout above 88.80 mark could act as a trigger for the renewed buying interest, paving the way for the upward move towards the next resistance 89.10. On the flip side, the 88.40 zone is expected to serve as an immediate support, cushioning the pair from deeper corrections. Market participants should, however, remain attentive to the global risk sentiment, crude oil prices movement, and capital flow dynamics, which could influence the short-term fluctuations in the pair. This is all for this week. Thank you all. For detailed disclaimer and disclosure, kindly visit our website www.hdfcsec.com. Thank you.